What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now in today's video, we're going to go over a Bank of America analyst that actually upgraded their price target on NIO. And we're going to go over why they actually upgraded their price target leading up to NIO Day, which is on January 9th for those of you who are unaware. But before we actually jump into the video, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates every day. So again, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it. But to give you guys some context of where NIO has been trading today, they're up right around 1% as of right now, and they're trading right around $49. Now, they actually spiked up early in the trading day when this news of this Bank of America analyst prediction came out, and NIO actually spiked up to over $50, which we haven't seen in a while, and they were right up around 4% at that time. Now, obviously, since that news this morning, NIO's kind of tapered down, but they're still up over 1% on the day, which I think is a relatively good thing to see considering where NIO's been the last few weeks. Now, I'm not referring just to the last week because on the 1 week chart, NIO is actually up 5%, and they've been trading pretty positive this last week. There's not been many downtrends in the past week or so. But when we look on the 1 month chart, that's where you can see more exaggerated on how NIO's been trading pretty up and down, and they've been relatively volatile. Now, they're only down 1% on the month, but again, you can see how they've had those peaks and valleys, and they've been pretty volatile for most of the month. Now, it looks like they are finally starting to climb back up and possibly test those highs that they hit previously. And I think this could happen leading up to NIO Day with all this anticipation building for NIO Day. And again, this Bank of America analyst raised his price target ahead of NIO Day, which is on January 9th. And I think this makes a lot of sense because all this anticipation leading up to NIO Day, anticipating all these new things that NIO is going to be announcing on that day, I think it's getting a lot of investors interested in NIO if they weren't previously, because this event only comes once a year. Typically it's in December, and that's when NIO announces new technologies and different vehicles that they've been working on, and possibly new vehicles that they plan to release in the coming year. And so we know that NIO Day is a big event, and there's a lot of investor interest that builds up leading to this day. And so this Bank of America analyst upgraded his rating from $54.70 up to $59. And he keeps his rating at a buy rating, which is pretty obvious here. And you might argue that this isn't a huge upgrade from $54 up to $59. But if you look at where NIO's been lately, they've been trending relatively down the past month or so. And when they've not been down, they've been pretty volatile. And only in the last week or two has NIO started to trend back upwards. And I'm sure there's a lot of investors out there who thought NIO was just going to continue tanking. And they thought this was the end for NIO. But it's actually quite the opposite because NIO is a very long-term play, and a lot of these analysts putting out these ratings, they're not putting out these ratings for a few weeks or a few months into the future. And I think that's a pretty big misconception when it comes to these ratings that these price analysts put out. Too many investors see these price forecasts put out, and they're actually supposed to be for 12 months into the future, unless they're specified otherwise. And so when an analyst puts out a rating from 54 up to 59, that's only a $5 increase or about 8 to 9% over 1 year. And too many investors get their hopes up for NIO, and a lot of investors start pooling into a stock when they get a new price forecast. But I don't think many of those investors realize that these price forecasts are again for 12 months into the future. But on top of this price forecast upgrade, this analyst Lee lowered his NIO net loss estimates through 2022 following the company's $3 billion capital raise, which happened in December. So for those of you who haven't been keeping up with NIO super closely, NIO actually did another stock offering in December, and this was to raise some capital because their competitors like Li Auto and Tesla, they had also done the same thing and they sold extra shares to gain more capital. And so NIO didn't want to be left behind, and they didn't want these smaller companies like XPeng and Li Auto to catch up to where NIO is currently at. So they did another offering to kind of keep up with the trend of these other EV companies. They ended up selling about 68 million shares, and then their underwriters also had the opportunity to buy an additional 10 million shares. And that included Morgan Stanley and a Chinese investment corporation. And so the total was brought to about 78 million additional shares. And all of this news about these companies raising capital, like Li Auto, XPeng, and Tesla, and of course NIO was the last one to raise capital, but all that news came out after fears of delisting of Chinese stocks. And so there's plenty of reason to see why NIO was trending down the last few weeks previously, but it looks like they're starting to get back on that trend and start trending upwards. And a lot of it is anticipating NIO Day. And so you could argue that it is priced into NIO's share price, and they might not have a big spike up when NIO Day comes. But even so, even if it is already priced into their share price and all this anticipation building up is bringing NIO's share price up, you can't really argue against their share price going up. And one of those big things that's going to be announced on NIO Day is their new sedan that they're releasing. And this is going to be NIO's fourth mass-produced vehicle. And I believe NIO is creating this sedan to compete with Tesla's Model 3. And it's also expected to be equipped with NIO's advanced vehicle chips in anticipation of their cooperation with Mobileye. And if you guys aren't familiar with Mobileye, this is going to allow NIO to launch a robotaxi service in China. And Mobileye is with the help of Intel. And so it might not be a bad idea to invest in Intel if you're investing in NIO, because they do kind of go hand in hand. They're both in the technology sector. Now, of course, NIO makes electric vehicles, but they are getting the assistance of Intel in the future to work on this Mobileye, which should allow NIO vehicles to become robotaxis. So that is a huge thing going into the future. If they can become successful with these robotaxis, I would argue to say that NIO is going to be probably one of the biggest, if not the biggest, EV company over in China in the next 5 to 10 years. And then of course we know that NIO is going to be unveiling their 150 kilowatt hour battery pack on NIO Day. And this is supposed to increase their range up to 900 kilometers. Now again, I've mentioned before that this is equal to about 560 miles. Now this is way more even than a lot of gas-powered and internal combustion engine vehicles, because most gas-powered vehicles have less than a 500-mile range. And even a big majority of them have less than a 400-mile range. So to see NIO releasing such a big battery pack and such a powerful battery pack, this should allow them to increase their customer base and bring in more customers that wouldn't have bought an electric vehicle in the past. And a lot of that would be due to customers not wanting an electric vehicle that they would have to charge every day. If they have a 560-mile range, or a 900 kilometer range, they don't have to charge nearly as often. And when you pair that with the battery swap technology that NIO has been working on, and they're also working on the second gen battery swap stations, this is one of those things that really should help bring in more customers over time. And it should allow them to build up quite a big customer base, especially because a lot of people over in China are in apartment complexes and they don't have the luxury of being able to charge their vehicle. So when you combine this extended range with their battery swap technology, that's really going to be a lot more attractive to customers that wouldn't even have considered electric vehicles in the past. Now, with all things considered, we know that NIO has been shooting up pretty substantially in the last year alone, and their shares are already up more than 1,220% in the last year. Now, they are trading at 48 times their sales, and so a significant amount of their long-term growth is priced into their share price. But this doesn't necessarily mean that NIO is going to continue pulling back or that they're even going to pull back too much. I think too many investors fear that NIO is too overpriced. And while I wouldn't necessarily disagree, because I do think the way NIO is trading that they are relatively overpriced, but given where NIO is going to be in the future and given where the electric vehicle sector is going to be as a whole, you have to look at this as a long-term play like I've mentioned many times in the past. NIO, in terms of automakers, is pretty much just a startup at this point when you look at how long they've been around and you compare them to other auto manufacturers around the world. But if you consider how much they've grown in just the last year or two, NIO is going to be a big competitor, and they've already passed companies like GM in terms of what they're worth. So they definitely have a big advantage given the fact that electric vehicles are going to be the vehicles of the future, and pretty soon they're going to be the only vehicles on the road. And so even though a lot of auto manufacturers are much bigger than NIO, NIO has a lot going for them given that they started producing electric vehicles so early on in comparison to traditional auto manufacturers. Now again, I think NIO, even though it is pretty speculative, I think it's a good long-term play. Now, I'm not a financial advisor, so you should do your own research when you're investing in a company like this. But I also want to show you guys some of the analyst ratings that are currently out there right now. And this might kind of ease your mind if you think NIO is going to continue pulling back. or if you think they have more pulling back to do. So you can see here, these are the most recent analyst ratings for NIO's share price. And you can see at the top of the list is Goldman Sachs, and they actually upgraded to a neutral, and their price is at $59. Now tied with Goldman Sachs, which it doesn't show here, is Bank of America, which we went over earlier. And they maintain a buy rating at $59. Now it shows here $54.70, but of course, as we went over, they just released a new price forecast. And so there's two ratings at $59, and then next in line is Deutsche Bank at $50 and JP Morgan at $40. So you can see some of these bigger firms definitely believe in NIO. Now, given the fact that these are for 12 months into the future, these aren't things that should affect NIO in the short term. Now, we know that a lot of times when ratings come out, we do see NIO shoot up. But realistically, they shouldn't affect NIO's share price too much because they are predicting 12 months into the future. So if NIO is around this $50 to $60 area in the next 12 months, now of course I think they're going to be well beyond that, but even if they are only at $59, if you compared that to just normal growth of a normal stock, that's still very good gains in a single year. Now again, I think NIO is going to be way beyond that $50 to $59 range, especially once they start doing these things that they've been talking about, like expanding to Europe. And then when you look at their delivery numbers that they want to hit by the end of next year, I think when you combine all these things, NIO is going to be worth way beyond that $50 to $60 range. And I think they could be trading up closer to that $100 share price by the end of next year. But I want to hear what you guys think down in the comments and where you think NIO's share price is going to be by the end of next year. So by the end of 2021, where do you think NIO is going to be trading? Now again, like I mentioned, I think they could get up to that $100 range. If I'm being a bit more conservative on their share price, I think about $70 is more realistic. But again, we've seen NIO shoot up pretty high in the past, and I think it's definitely possible for them to double in share price by the end of next year. So again, let me know what you guys think down in the comments and where you think NIO is going to be trading by the end of next year. Also, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. When you sign up and deposit $100, you get 4 free stocks. And this promotion does end soon, so make sure you guys get your free stocks before it ends. Lastly, I wanted to mention that I set up a Discord server, so if you guys want to join that, it's totally free. And you guys can sign up using the link in the description, or you can use the top pinned comment down in the comments section. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.